So that price of Brent crude oil, which is the global benchmark, up for a second day in a row. It surged over $100 a barrel today. First time we've seen that happen since May. This after at least one of the Saudi oil tankers was attacked in the Red Sea. It's become kind of the story of the day in some ways. Doug Flynn from Flynn Zito Capital Management is here with more. Good to see you, Doug. I'll use the telestrator to illustrate what's been happening in the oil market. And we see this move back to the upside. At last check, the Brent crude price that I referenced here just a tick below 100, but it was above it earlier because this oil crisis, as we're putting it, is now on a number of different fronts. We have the Black Sea at the top, but of course we're worried about the Strait of Hormuz right in here. That's 20%, right, of the globally traded oil. But now the Strait, the Bab al-Mandeb here, they go in the other way. That's a portion as well, and that's where the Houthis are hitting or threatening to hit. So what about oil in your outlook?
Yeah, I mean, up to a third of the world's oil goes through those two areas, so it's key as far as choking the global supply. And moving that price up to $100 does a lot of things, and one of the main things it does is it makes the inflation fight a lot harder. We know it's going to translate into higher gas prices and food prices and down the line. And we had some really good inflation numbers come out last month based on where the prices were at the end of June. And so this is not looking good for people, and it's going to make it much harder as the costs go back up, directly attributable to the oil prices.
409 now, average price at the pump for regular unleaded. But you also think about it in context. You mentioned inflation. You got the tariffs coming back. So those two things are essentially policy decisions. Tariffs clearly are policy decisions. There's the national average for gas prices. But, you know, the war, some support it, but it's a decision that's being made to go to war. So those policy decisions by this administration, that puts us on a bit of a bind inflation-wise for the time being.
It definitely does. Gas prices are up about 25 cents a gallon from the bottom not too long ago, and then you start feeling the pressure there as it translates across all of the things. But I think that this is what the administration does. They'll ease things when it gets too hot, and then when if it gets hot, they'll try to ease things. It's kind of the ebb and flow of how it seems everything that the administration does works that way. But it really hasn't translated, other than today, which was sort of a combination of this and the technology problem going on. The market is held up really, really well in spite of this. So I think we're still taking the long view, and I think even consumers might be taking the long view of this. But of course, the pain is real, especially for people that don't have a lot of income.
Yeah, that technology thing you mentioned. We had talked a lot about AI already this hour, but just a brief word on the markets today and you know, how much is oil and how much is concern about these companies maybe spending too much on AI, Google, and the like. NASDAQ's down ahead of the close here by, you know, 2% plus.
This is definitely like sort of the first time people are taking a look sort of at the earnings and saying the spending is just enormous and the payback timeline just might be longer than anyone anticipated, and that's where that gets dicey when you're looking at these companies. You look at the amount of spend that they're going to have, and investors, rightly so, are saying, hey, is every dollar that you're investing on behalf of me, because I'm investing with you, going to pay off and be profitable and turn into revenue? And it is very unclear whether that's going to happen, and if it's going to happen soon enough. And so you're seeing pressure there. Now, AI is definitely real. We know that. And so it is somewhat different than other sort of booms that were based on pure speculation. But that doesn't mean that every investment is a good one. And we just don't know, and we don't have the clarity on that. And so that's where people are saying, you know what, I made a ton of money. Let me take some money off the table here. And you're seeing that. And we are going into the weaker months of the year as you do late summer into the fall.
Last thing, big picture, 1 minute ahead of the closing bell. We talk a lot about wealth gap. We talk a lot about one of the things that might be changing that or affecting that in the future is the transfer of wealth from the baby boom generation, because so many baby boomers, and as they die and leave money or assets to you know, family members presumably, that's a huge transfer of wealth. It's been a big story. Okay, well, is there a little fly in the ointment here? Washington Post says people are living longer and their wealth is evaporating, okay, and they won't have as many assets because they got to use it up themselves. How do you see that story? Net positive, net negative? Here's some of the charts in terms of people living longer.
It's a big problem because the cost of aging is something that people don't really build into their plan.
Right.
And, you know, look, we all know that there's a huge wealth transfer going on from the baby boomers to the next generation, but 3/4 of that wealth is going to go to the top 10% of the wealthy. And, you know, the bottom 50% are only going to get 1%. So the people in the middle, which is, you know, the wealthy people are going to be able to handle this. The people at the lower end are going to go on Medicaid. They don't have assets to transfer. It's those people in the middle, maybe their biggest asset is their home. And the home is at risk if they have to pay for this care.
Right.
And so sometimes, you know, the biggest takeaway, I think, is if you're thinking about your own retirement and you're in sort of not the boomer generation, you're a generation or two below that, and you were counting on an inheritance to fund your own retirement, you really should think twice about that because the care for your parents might eat that up. And sometimes that money is not there, and we do see that. So it is very costly. Only 3% of people have long-term care insurance. That's very costly. So it's got to come from somewhere, and that's where a lot of this comes from.
But it's a continuation of that same story, wealth gap story, or gaps that we always talk about. Thank you, Doug. Doug Flynn, closing bell. Just